My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to my strategy session on a Sunday. I just all of a sudden was on my Peloton bike this morning where I get my best thoughts. I was sweating out Halloween, and I'm like, you know what? Chase is going to lacrosse. I don't have a basketball game till later. I'm like, why don't I go to the Short Hills office and talk to everyone out there that wants to listen about what I'm doing in my trading accounts, how I'm getting myself situated with my mind, what I'm thinking about long-term for all of my long-term accounts. And I want to just say it off the cuff to provide value for you. So right here, also, I have to show you the Trader Hub, which is a virtual trading floor, so you could see what positions I have on for compliance. And it's not many. I usually have 25 to 30 positions on when we're above the 8-day, the 21-day, when markets are healthy, when markets are trending, when there's continuity, when you could buy high and sell higher. Right now, I do have a bunch of positions left over and some that I'm positioning more with options because risk is premium paid for this week, which I'll get into. So now that you took a look at it, let's go back. So I'm going to try and talk about a lot of different time frames, and I'm going to do it in a way that's very crisp and fast. I probably need 20 hours to talk about all the things that I'm thinking about as I head into this week, but I'm going to try and do it all in about 45 minutes. All right, so I have 45 minutes. I'm going to go fast. But before I do it, I want to tell you a little story because not everybody, is 47 years old. Not everybody has traded through the tech bubble bursting, the financial crisis, the bull market from 2003 leading to the financial crisis, the bull market post-financial crisis all the way up with a few corrective phases up until the pandemic in February. So what I try and do is give you some of my experience. I wrote a few ebooks, which you could download, you can look at later, which tries to go over my stance, whether the market's healthy, whether the market's vulnerable. So to give you my pretty much stance on risk, whether I'm in a portfolio approach, which means I'm holding a lot of positions, hopefully leaders massaging them, staying with them using a tier system when we're above the 8 and 21 day, which is my important momentum moving averages. I go over that. There we've been above those pretty much all the way since the March lows with a few different, fastball brushback pitches where we had to reduce positions to let a few different active sequences work out. And then some of you are in your 20s and 30s and don't know that long term, if you can handle it responsibly, the bull market wins. I want to give you a quick example. My wife is a neuropsychologist. She started working at UMD&J. She, I think at that time, was 28 years old. The market was, pretty strong. And she's like, Scott, so, I have a 401k. What do you think I should do with it? I'm like, what do you think? You max it out. You max it out because it gets matched by your institution. And you know what? You make a little less in your paychecks, but longer term, it saves it for you. Okay, it's a great way to build wealth over time, whatever it is. Wealth is measured differently for everyone. So this was like 2002, 2004. But don't you think it's too high to start? I'm like, what do you mean too high to start? It doesn't matter. You're going to be working for the next 30 years or more. So anyway, 2002, 2004 starts. Okay, also I'll give you a same story at the same time. My friend, I won't call him by his real name, but Mitch had 2 kids that were in there. One was 2, one was 4, or somewhere around there, and he started his 529 plan. Okay, for his kids, age 2 or 3. So my wife starts putting in every single month. Mitch starts putting in every single month. Then all of a sudden, we're getting into 2007. Market starts to deteriorate. We have a head and shoulders top in the S&P. I'm telling Mark Haynes on CNBC, I think we're going to have at least a 10% correction, and he laughs at me. Erin gives me a funny face, and all of a sudden, a week later, we're down 10%. So my wife is like, what do you think we should do? I'm like, what do you mean, what should we do? Just keep putting your monthly flows in. You put your monthly flows in. This is what you want. This helps your average cost over time. Because when the market's just trending higher, yeah, you're involved in your cost averaging it up, but don't you want to get cheaper prices along the way? Uh-oh, Mikey's calling. Hello, Mikey.
Hate to interrupt the story, but just retweet the link from your Twitter account.
All right, see, this is real time, guys. This is Mike, my editor-in-chief, makes me look good. He wants me to retweet this out, which you could watch it actually on demand later anyway, but I'm going to retweet it out right now for those who were asking about it. So let's go. Let's see. I'm going to retweet it out. Hold on one more second. Okay, that's retweeted. And this is retweeted. Okay, here we go. We're going to go back to where we were. All right. So anyway, here we are, the financial, crisis where too many people refinanced their house 4 or 5 different times. The banks were irresponsible and they put them into these, CMOs because Congress said everyone needs to own a home, the CRA. But anyway, we're not going to get into the whole reason why that time frame has been a little bit different than the last few corrective time frames. Anyway, so we had this first big move lower and everyone's like, what do I do? What do I do? I'm like, Selena, I'll tell you my wife's name's Selena. Hi, Selena. You would just keep doing it. Right now, I think at that time she was maybe 32 years old. It was 4 or 5 years later. And she kept putting her money in every single month through the financial crisis. I also had a friend of mine who was, pretty smart, likes to trade the markets. He actually, while it was happening, we're 20% lower. He's like, Red Dog, I saw you on TV when you said that we were going to have a 10% move lower. I went to full cash. I'm like, okay. I'm like, in what way did you go into full cash? You're not a trader. You work for a technology company. He's like, I went to full cash. I watched the stock market. I'm like, okay, you went to full cash in your 401k and your or your IRA. He's like, yeah. I'm like, okay, that's cool. And then a year later, the S&P is below 900. Okay, my wife's still putting her flows in every month. Mitch is still putting the 529 in, and then all of a sudden, I think March of 2009 or whenever it was, we hit our bottom. I was on with Mark Haynes. I showed you the picture before, where it was the Monday. I think the S&P, I don't even know where it was. It was like around 700. The Dow was down below, 7,500 or 7,000, and we were like there talking about the VIX and the nauseous meter, whatever. Everyone who was, I'm in cash, I feel great. My wife every single month, Mitch every single month. Lo and behold, we hit the bottom, and then all the way up until about 2012, every single bear was calling for a retest of that area. We never did. By 2012, my wife's account was friggin' awesome. She got the whole cost average because she could do it. She was long term. Mitch's 529 plan for his kids were high. He paid for one kid to go to Indiana, another one to go to Maryland, and they stayed the course long term. And then I called my friend. It was like 2012. I'm like, hey, how you doing? I'm like, how's work? Work's great. I'm like, wow, you did really well timing that big correction. How's your account now? He's like, well, I'm still sitting in all cash. I'm like, what do you mean you're sitting in all cash? You timed it perfect. You sold it before the major correction. When didn't you? How come you never got back in? He's like, it happened so fast, and then I just didn't want to chase it, and I never was able to put my long-term 401k or 403b or IRA back in. I'm like, that's the problem. Longer term, if you try and be extra cute and you time it perfectly the day before and you don't get back in, how'd you do long term? Not so good. So the moral of that story is long term, if you put money in every single month into a 401k or 403b or an IRA, continue to do it, and do it with S&P funds. Don't try and pick stocks in those, because sometimes the leaders of the past don't turn into the leaders of the future, etc. Long term, you can't go wrong, in my humble opinion, putting monthly flows into an S&P account. And if you want to create alpha, like everyone talks about on TV, create alpha means outperform the market. Whenever you see the octagon on TV and markets in turmoil, maybe throw a few extra payments in, because chances are the market's down 10% off the highs. And if you put more money in when you're down 10% off the highs, or 15% off the highs, or 20% off the highs, chances are over time we will make new highs. And at that moment, you created alpha around your long-term accounts. So that's one way to do it, long-term. Okay, and for me, I remember in February and March, I was telling you guys, because everyone's like, what do I do? I don't want to sit through another financial crisis when it was 2007, 2008. Some people lost their jobs, and their house got cut in half, and then they got stopped out, and they lost everything, and they had to rebuild. I was like, you know what? Let's talk. Like Red Dog, what are you doing? I'm like, well, I have a 401k, Every single month, I'm putting my flows in. Doesn't matter. I'm 47 years old. My wife has a 403B because she left UMDNJ, which was a state university, so she had to leave her account there. So she started a 403B every month. Okay, so she was able to do that. But her other account, which we're going to get into, because a lot of people want to know, what do I do with my cash account? I've been sitting in cash. I'm going to give you guys a few of my thoughts for that too, because I did that during the pandemic in February and March. I'm going to do it again because a lot of people like to figure that out. So I kept that. And for my son, he was 11 at the time. I was like, you know what? I threw extra money in because I started his 529 late. I started at age 4 versus at age 1. And then I upped his monthly from 500 to 750. So I was as transparent as possible as I could be. So that was, that was here. So everybody wanted to talk to me about, first of all, look at this. Look at the 8 and 21 day. Look at this gap down. That was when the active sequence changed. That's when if you trade for a living, you had to say, hey, I'm going from 15, 20 positions to 4 or 5, or I'm going from 6, 7 positions to 1 or 2. And then we broke the moving averages after being in a healthy trend for a while. And then that's when that started. So anyway, my wife, who couldn't contribute to a longer-term account, it turned into a cash account that I put into a 4% guaranteed instrument. So right around here, okay, I think it was coming into February, we were about 10% off the highs. I'm like, guys, everyone on TV talks about putting money to work, cash to work. I'm like, let's model my wife's account so you can model it also. We can come up with a plan on how to slowly leg in a cash account into an S&P fund if you have it sitting there in cash, if you don't trade for a living. So I do believe on this day, okay, when we hit a low of 2860, let's just model it and say she has 200 grand. Okay, I put $50,000 back in here. Okay, saying, okay, I'm going to put 25% in here, and every 5% lower, I'm going to put another 25%. And then I remember I put another, okay, I think another 25 grand in here, okay, which was down to 2462. So now I put half of her account back in. So now she's in half in an S&P fund, okay, buying this dip. Okay, half was still sitting in the 4% instrument. Okay, and then I remember no one knew that this 2191 was going to be the low. Who knew? I mapped out that. I mapped out 1850. I mapped out 1600 at that time. The world was a scary place. So all you could do is think ahead and say, okay, you know what? I was like, here I'm already have half in. Here and here, this is not low enough for me. Okay, I'm like at 1850, I'll do another 25%, and then I'll wait to see the technicals turn into just a signal that the market could trend again. And then I'll add to it when it's working. So anyway, this was the low, and then I remember taking it back out, which wasn't the best spot to do it, but right around here. So I took it out around 29.48. I carved out 10% for her in her cash account, and I'm like, let me put it back in a 4% instrument. That is on the side. That's one of my 4 long-term accounts. Okay, I also have 3 professional accounts, which I'm going to get into, what I'm thinking about for the election. I'm just trying to talk out loud because long-term people are still thinking about what the hell to do here. And then, we had all these active sequences. Active sequence 1, sideways sequence to digest. Active sequence 3, again to the upside. This was your corrective phase. Active sequence 4. Then here was active sequence 5 until it got back to the active bears. I like to call these active sequences because as an active trader, I need to know my stance, whether I'm tactical, whether I'm in a portfolio approach during these, so I know my risk, on how things are acting so I can make my money. I make my money as a trader. That's one reason why a lot of people follow me, is because I make my money as a trader. Okay, I don't play a trader on TV. Yes, I give some levels, and I've been on TV every single month since 2007, and I'm on Fox Business every week. I'll be on there on Monday, but I make my living as a trader. And I don't have a publicist, that I spend $5 grand a month to get me on TV. No, they call me for technicals. They call me because I tell it like it is, and I'm in the trenches with, hundreds and hundreds of traders. So I know where the heartbeat of the market is. I know what the key of the day is. I go over that in the 630 Club with you guys every single day, every single week. So anyway, this was your top here at 35.88. Came down. This was your September lows, lower high. Okay, and if you look closer, okay, here. This is when this wedge type pattern on an active basis broke to the downside. This is when we lost the 8 and the 21 day. This is when I pretty much went from, portfolio approach, hoping that maybe this is a cup and handle pattern, to look at that break. And that was a that was a bear trap that day too, because if you remember, we closed pretty well here. It looked like we were going to break this little descending channel, and it didn't happen. So anyway, on that day, I reduced from like 25 positions to 12, and I've been trying to, maneuver since. And I will say October was a very hard month. This is actually my worst month of the year. So if you want to put it into perspective, how are you doing in October? For me, for the year, this is my worst month, and I'm also on line to have my best year in the business, actually 4 times my average year over the last decade. So not to brag, I'm just saying, that's how much movement there's been this year to make money off of. So anyway, thank goodness I was having a good October, and I just basically, lost my month, in the last 2 weeks, which is fine. So anyway, that happens. It's been harder. Tech's been harder. It's just been harder. So if you're making money and you love to be short, and you're saying, Redler, what's the matter with you? I'm having my best October ever. Okay, great. You probably trade from the short side, and how'd you do prior this year? And if you're still in the highs of your year, congratulations to you, and cheers. I'm less than 5% off the highs of my year, so I'm pretty happy about that considering the type of month we just had. So anyway, back to my wife's cash account. So she's been back in that 4% instrument. So right here on Friday on the VTF, I was like, I'm putting 25% of her money back in. Okay, we're 9% off the high. So I called her. She called up Bright House. She put in 25% of her $200,000 back into an S&P fund. Okay, so that's plan number 1. So in my mind, this week, if we have our election on Tuesday and there's no president, and and it's contested and volatility hits and we break 3209, okay, if we break 3209, which is a very important level, that's a level to know. If we break 3209, which is also now the 200-day, there's really, this is, I guess you could say, is a level, okay, right here. So this level is, what is that, 3118? But 3118, I probably wouldn't put more of her money to work because I just put it in here. It's too close. I would wait for potentially 2965 to 3000, which I think is doable. It might not happen. We might hit this spot. We might have a president. They could talk about a stimulus package, and all of a sudden, boom, we could, draw this as a channel. Okay, this could then turn into a channel. Okay, and we just bounce off this low end of it and come right back up into the middle end, and we're back into a more methodical type of scenario. That's a big if. Some guys like Redler, I like when you put percentage odds. What's the percentage odds that you think 3209 holds? I'd say 60-70% odds that this area holds. So a little bit more. I'm leaning a little bit more that it holds and it doesn't hold. So anyway, so what I will do again is in this spot, trading wise, I'm going to trade it. I'm talking longer term now. Okay, again, before we get into short term trade. So here, okay, if we see this and we close on the lows that day, maybe I'll put a little bit more. But I'm going to wait. I'm going to try and be patient here. So with that being said, this probably would be the next spot that I put a little bit, but this would be the spot that I go back into half of her account back in the market. Also depends when it happens. Is it in a week from now? Because volatility went crazy because no president, no stimulus, COVID cases rising. We all of a sudden announce a lockdown here, kind of like what, they just did it overseas. Boris just said they're going to be down for 30 days. So we'll see how our futures are tonight. We'll see how we open tomorrow. France is already in a 30-day lockdown. So you never know. Okay, that's why, again, at this point, my trading stance, I have a lot of things going on, with defined risk versus unlimited risk. Almost like when I go into an earnings call. So I would write this level down. So this is very, very important. This level would probably be like a red dog reversal level. We come in, all right, stop everybody out through 3209s, hold here and go up. And that would be probably, one of the better case scenarios over the next week or two. But then this would be, a key spot. Unless, the sugar honey iced tea really hits the fan, I doubt we break this, going into year end. But again, anything could happen. So, coming into this week, I don't know what the futures are going to be like tonight. Right now, people are saying the Dow futures are off 200 points. I don't even know where they see that on a Sunday morning. But anyway, we'll see where we are. If we open below 32.33, which is Friday's low, into here, we'll see, does this hold? Does that get reclaimed? You know what that is. That's the red dog reversal. if that happens, we'll have a nice trade on Monday morning where we buy into the weakness and, and then we reverse up kind of like what happened on this day, if you remember. Or, maybe we gap down and people get worried. It's a very close election and da 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 da, and we break it, and then you have an air pocket. So you don't know. So so again, just to finish off on the long term. Okay, so for her cash account, I put in 25% here, and I might do another 25% if we see that, or depending on how quickly it happens or when it happens or what the environment's like, because we're going to measure the environment every day, every week post-election. This would be a spot where I put more of it to work, and then we'll see. Just remember, this chart only goes back to, the March lows. So this is, we're 10% off all-time highs, okay, or so. So if all of a sudden things got a little nutty, then you got to open it up to the 5-year, and look where, where we were. So you could, I don't want to. Remember this, by the way, this was my road to 17. Oh, look, that was, when was this? This was 2100. So if you think about like how long this bull market's been running, anyway, all we are is right here. So I'm not going to, clean this up. I'm just showing you in perspective. Everyone's like jumping out. Oh my God, we've been such a crazy, volatile, big corrective phase. But meanwhile, this was the March lows, and this was 2012. We still have, a long way down if the market wants it. You don't know. So I think this is a very intermediate level. This is where we broke out from. This would be a likely spot that if things stay volatile and we have no president and, it goes for a week or two and COVID cases rises, that would probably be a spot. But that's just me thinking out loud. So anyway, let's go back to this again. So that's the chart of the S&P. So if you want to, short term, so that's what I'm just thinking long term. Long term, my 401k every single month, doesn't matter. My son's 529, he's 12 now. I'm still putting in more money than I was putting in last year every single month. And my wife's cash account, I just put 25% back in. She's been sitting in cash. And I'm looking at levels to do 25% down, not up. And then that's the long term. Okay. Short term, okay, which I showed you my virtual trading floor. How do you want to position into this week? If you trade for a living and you've only been doing this for a year or two, you should just be in all cash. All cash, trading the few every day, depending if we gap down big, gap up big, that's it. Cash is a position. You don't need to worry about, catching moves, having money put to work. You're not a long short hedge fund. You're not a multi-billion-dollar, HFT strat. You can come in every single day and probably make really good money with the volatility, with no risk, knowing your levels, doing your preparation, and just day trading. And that's typically what I did for 10 to 15 years, maybe 15 years. I've been doing this in 98. For 15 years, I probably just day traded, and then every now and then I would do like a day plus trade. Something closes strong, I go out long and opens up the next day, I sell it. Something goes out weak, I'm either out of it or I'm shorted, it opens down, I cover it, and trade intraday. That's how I made a really good living for a long time, well into the 6 figures. And you can do it as an active day trader. As Joe lives across from me, he's had 6-figure months just day trading. So you could do it. Okay. Lately, the last 2 years, for me, I've treated my my professional accounts more like a portfolio manager, who defines risk, because I've been doing it for so long and I have such, bigger ideas, and I have the risk tolerance where, when we're above the 8 and 21 day, I like to be carrying 15, 20 positions or 5 to 10 positions, depending on what's leading, and massage them, okay, and stay with them and let the market make me money, and let me add tier systems around stocks I probably would be trading if I was flat for cash flow. And that's when we're above the 8 and 21 day. And, we were there lots of different times, This was I remember this active sequence. This active sequence in 2019 was probably my best quarter I've ever had, okay, because what did? We trended above the 8 and 21 day this entire time. And I know guys that actually were short this and got put out of business because they were stubborn and they didn't read the technicals and they had an opinion that we were overinflated, overvalued, et cetera, and they got put out of business before this. And then I know guys also who started buying here and got put out of business buying because it was below the moving average and they were trying to catch a bottom and they were trying to use their opinions and they got crushed. And then there were a bunch of guys who said, if you listen to, remember on CNBC, when we went to 2850, 2900, everybody said we have to retest 2191. So they started shorting here added here. They didn't see a red dog reversal when we go below, grab above it, and they started shorting the entire way up and gave back their whole year because they were listening to all the hedge fund guys who said we have to test the lows and never backed up whatever they were saying. So anyway, we don't do that. We listen to the technicals. We listen to the trade. And as of right now, going into next week, if you're not that experienced, you could be flat. You can make money long, you can make money short, doesn't matter. If you treat your account, because you've been doing this for 10, 15, 20 years, like a kind of like a PM like I do, I have an active account, I have a swing account, I have an options account, and I have an algorithmic box account that takes my active and my swing and makes my wins bigger, my losses bigger, but I'm pretty damn consistent. So typically that adds extra money where I don't have to look at the P&L, because sometimes if you look at your P&L when it's down a lot, you get stressed. When you're up a lot, you're like, ooh. So I'd rather not see the P&L. I'd rather let the back end see the P&L. But anyway, so here we are coming into this spot, post earnings, and as of right now, the market's very flimsy. Okay, the market is glass half empty. Why is it glass half empty? Because we broke the 8-21 day. Why is the glass half empty? Because we've had some strong earnings reports that have been sold, not bought. Started with, Netflix was underwhelmed, so that made sense to sell. Tesla was pretty strong, but there was no FOMO, so that was sold. And then on Thursday, Amazon and Apple weren't spectacular, but they could have been bought if we were glass half full. Instead, they were sold. The only two earnings that really worked were, Pins and Snap, and that was like a short-term setup to beg everybody who thought, remember on Thursday I was sitting there having a steak sandwich. I'm like, guys, I think I'm going to sell my Facebook and a lot of my Twitter because everyone's trying to telegraph a big move in Twitter and Facebook because Snap and Pins had it. And when something's way too telegraphed, it's not going to work. It usually happens on the other side when sentiment's against it. But anyway, I did lose money in my Amazon call spread into Friday, and I had half of an Apple one for next week. So we'll get to that. So here we are, 9% off the lows. We'll see where we are on Monday. And, it's on Wednesday is going to be a big gappy day, no matter what happens. Okay, I'm not here to tell you if I think Trump's going to win or if Biden's going to win, or if we're going to have a blue wave or not a blue wave, or who I want or who I don't want. I'm here to tell you there are a few ways that I'm positioning that I think, could make me money in a defined way. Okay, first, if you think that gold is going to go because we're going to have this massive stimulus package plan, a week after we get a president or 2 weeks, you look at gold, write this down. This is what I'm in for gold. Okay, first of all, I made a lot of money in here. Okay, I didn't trade GLD itself, but it looked like it had a great pattern. It was above the 8-21 day, so I bought a 165, 175 call spread, made a few 100% before that move up. I didn't catch the top. Here when it broke out, there were many ways to trade it. I didn't actively trade it. I positioned myself in here. I gave it some time and said, you know what, it makes sense. The reason why the market's hanging in there, not because Main Street is strong, it's because they're printing money out the yin yang, and chances are gold's going to go to 2,000 or so. So I was in that. So in here, you have another consolidation. And I'm not trading gold. I don't love gold. I remember, if you want to Google my gold bold call with Mark Haynes back in 2008 when it was $850, I said I was going to go to $1,500 an ounce. I was dead right, but I was also a little kid, and I might have made like 50,000 in that call where guys made millions. But anyway, Google it, a gold bold call by Scott Redler. Anyway, I'll tell you that story too another time. So what did I do? I positioned, I said, hey, I have the GLD, okay, November 15. Let's see, hold on a second. November 20. So no, November 20. We go November 20th. That gives us 3 weeks, the 181s. So I'm saying, so if short term, okay, we get a president and we get a stimulus package and gold has a bid, okay, and it goes, I needed to get above 181. So I bought the 181s, and for that I sold the 185s. 181 to, and now I figured that would be resistance. So I think somewhere around here, that's not a big bolstered move. I also bought this 2 weeks ago, probably over here when I thought it would happen sooner. So it didn't. So I'm in the 181 by 185s, November 20s. I think my cost was like $1 to make 3. All right, just to have on. I have that, and I said, just in case it doesn't happen in the next 3 weeks, maybe it happens before the end of the year. So my other gold call spread is, let's see, GLD 185s. January 15th. So instead I said I'm going to buy the 185s, and if it goes back to all-time highs, maybe it happens, by beginning of next year. So I was like, this is a nice big consolidation. I might trade it, I might not trade it as the trade happens, but I want to be positioned just in case gold goes on a run in the next 3 weeks or the next 2+ months. So I have gold call spreads on. That's my thesis on gold. I'm not going to overtrade it. I'm not loving it, but there's a nice pattern there, kind of like the pattern that we had here, and it makes sense. So for gold, I wouldn't over focus on it. If you want to have some experience, some exposure to it, a lot of my friends have physical. A lot of them love it. They're bugging out to it, dancing around. I'm not a gold bug at all, but when technically it looks like it makes sense, I'll have some exposure. So I have some exposure to gold, and I probably won't trade it this week or next week. But if gold goes, I have some exposure. If gold doesn't go and it breaks this spot, my cost is premium paid and I'll lose it. No big deal. So that's gold. So let's talk the VIX real quickly. If you think, we're not going to have a president and, the market's going to break that support that I just showed you before, you think the market's going to break, 3209, chances are the VIX is going to make higher highs. Now, a month ago, I put on my VIX call spreads. I was on Fox Business with Liz Clayman. She's like, well, what would you do for the election? The election's coming up in a month. Maybe we get a wave 2 of COVID. What are you going to do? How are you going to do it? I'm like, well, I bought 2 VIX call spreads. I bought one, for right around the week after the election, and one for December, just in case, things don't go right. And that's, I bought the VIX 11, 20, 30s. Okay. So I bought the 30s. And I sold here. You can even see it. So I bought the VIX 11, 20, 30s, and I also took some off. I took about half off because I made some decent money off of it, and I sold the 34s. So the 30 by 34s, and then for December the 30, I gave myself more room to buy 37s. So I did that, somewhere in here. So on this first move up, I made some money, so I'm like, you know what? Let me take half off of both, and I still have both on just in case volatility spikes, with the mere fact that maybe, we don't have a president and we don't have a stimulus package and COVID cases rise. So the VIX, in my opinion, it can get back up to 34. So that's why I bought the 30s and sold the 34s, because that's resistance 1, there. The other spot that this can get to would probably be about 42, but I didn't say I'm going to give it all the way to 42. I wanted to have less risk on, so I bought the 30s and I sold the 37s, saying, hey, I'm going to risk $1.50 to make $5.50. That's 4 times my money as insurance on whatever it is I'm trading. So this is, again, is a concept. I'm going to trade day by day, sequence by sequence, but I'm like, okay, gold makes some sense. VIX call spreads makes some sense. So those were like 2 type of thought processes for my active account for the next few weeks. Then guys, like, what happens if we have a blue wave? All of a sudden we're going to get, wellness marijuana dispensaries everywhere. So how do we play that? I'm like, that makes a little sense. Why don't I have a little bit of the MSOS on? Okay, which is the U.S. My friend Todd, actually, who's very into the cannabis sector, he's a hedge fund for it, whatever. He told me about this here, this was a great technical breakout. Played it when it made a new high, so I started buying the MSOS here. I'm like, this makes sense. It's an ETF. I think either way, even if it's not a blue wave, and we have a split, strength between the Senate and the House. Chances are over the next year or 2. Okay, this is a long. Chances are we go from 4 or 5 or 6 states that are approved or legal to more. So this sector, which is horrible and been broken, maybe gets more love. So I was like, okay, this makes some sense to have some of this on just in case. Not a lot. I know my risk here. And then I want to also have like a lotto play. Like, what's the lotto play? Everyone wants to win the lotto, but usually you don't win the lottery. And you could spend 10 tickets or you could buy $1,000 worth of tickets. Chances are it's the same, same percentage that you're not going to win the lotto. But someone's like, what would you put on if you want a lotto spread? So I'm like, you know what? I play Tilray here and there. Okay, if it's a blue wave sweep and they just come after the sector, this one has a lot of shorts, has a lot of people involved in it, et cetera, et cetera. So, this stock, if you remember back in the day, holy cow, remember this move that this also, it's a good example. Look, think about this. This was above the 821 day. Look at this nice strong trend. When momentum's there, you got to stay with it until it got loose and wide and broke, and then you had your breakout failure there, and then you broke the 821 day, and then it's been broken since. But you could have shorted it here, 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 and here. Got put out of business there before it technically told you that it was ready to break to the downside. But anyway, so this was just 300. Not saying it's gonna. So for me, I've traded this a few times. So if you look a little bit, shorter term, I was like, what could be a lotto play? So I was like, you know what? Tilray could be a lotto play. So let me go with a little Tilray. So on Friday, just to have, where are we? Let's get there. I'm like, let me, it doesn't look like it, doesn't look anything. I'm like, why can't this, if this is going to have a fast, furious move where they squeeze everybody, why can't this thing get to, $10, $11? So I think I bought the 7.5s for 25 cents. So that's what I call lotto play. So my whole big marijuana play, until the new active sequence starts and then stays special and gets supported, and I stay with it because you get these sequences that happen, and then I'll trade it. Right now, when I'm just kind of thinking about having some risk out there, for something to happen that could be, could make a lot of money, I just do options. So I did, you do a few hundred Tilray calls at 7.5 for 25 cents. If it gets to $10, that's 2.5 from 25 cents. That's my lotto big spread for that. So again, trying to plant a few little seeds in different places. If this, then that. Okay. So MSOS is a little conservative. I'm not going to have a lot. Tilray is going to be my lotto, cannabis play spread. And then and then I'll trade it too intraday when things happen. Okay. You saw the VIX, you saw the gold. So now the question is, how do I want to be positioned? Or not, if just say we have a president and we get a stimulus package, this is the low, and we have a nice rally. That could happen too. Maybe Trump wins. Okay, who knows? If Trump wins, I think JP Morgan came out and said the S&P is going to be at 3,900. Okay, that's a big call. So, but if he doesn't, and who knows? When we don't have a president, again, things are going to be so damn gappy that, you really can't be that situated in positions for P&L if you trade for a living. So I'm like, what can I do to, just in case we have a president with a big gap up and we don't look good, like right now this doesn't look good. So you can't be positioning into this with size because still you have COVID cases rising when we have the election. I'm like, what do I feel kind of comfortable with, even though they don't look great, just to put some money to work. So on Friday, I did buy Apple. Okay, not the stock because the stock doesn't look good at all. Okay, at this point. Okay, Apple long term, I feel like long term, you always win if you buy a dip in Apple, but you have to do it strategically. If you want to look at the quick little technicals of Apple, you had your breakout failure, and then remember right here, you had your low and your higher low. This gave us the clues that we were going to have our rally in September, which we had. Okay, and then right here, I remember selling that, and I told you guys, I'm selling this. You guys, is Chase selling his? I'm like, no, he's not selling his. It's long term. But anyway, that's when I sold post-event, and then this was where technically it changed, where I remember it went red before anything else. I'm like, if it breaks this 118.50, I'm out. That's when I got out of Apple. And then it's been below the moving averages ever since. So here I did have a call spread on for next Friday. I bought the 118s and sold the 125. So I bought the 118s thinking that, hey, if it's good and they have great guidance, why not have a call spread? Not the stock, okay, a call spread because my risk is premium paid. For next Friday, I didn't do it for this Friday. I'm like, you know what? This Friday is too close because I didn't think they were going to have a great quarter. Who the hell is getting a new iPhone, when you have the iPhone 12 and the 12 Pro and 5G coming out? I didn't. I love this, but I will get the 12 Pro. But anyway, so I probably lost on that call spread. Hold on one second. So anyway, I was like, what could I do to have some exposure to Apple besides trading it? Because I'm going to trade it. If it opens down on Monday and reclaims 107.72, I'm trading it. If it opens up, I'm probably not going to trade it. I'm going to wait and see. And then I came out with this chart on Friday saying this is going to be really big for the market. Apple's always a leading indicator. I'm like, does Apple hold 103 to 105 area? Okay, and then bounce off it, and then this turns into a big channel? Or does volatility really spike, and does it break 103? Does it test 100? Does it break 100 and then see a move down towards a gap fill or to these moving averages? That could happen too. If this happens, we're not holding 3209. If we see this spot, chances are that S&P 3209 is taken out, and we're on our way to this area and maybe even lower. So Apple is going to be a key. Okay, do we hold 103 to 105? Do we hold 100, or do we fill this gap down to this area? So for me, I'm not just buying Apple because if I buy it and it goes to 94 to 96, it's going to hurt. If I buy options, all right, I know what I'm risking. So on Friday, I bought the November, just to start, the November 20. So it gives me 3 weeks to have a president, a stimulus package, and for them to say their iPhone 12s are selling well. And I bought the 115s because I figured, if it's going to be any good, it's going to have to get above these moving averages. And that's what I put on just to have, for some kind of exposure to the market if we have a president and we gap up. And if we don't, I'll lose an Apple and then I'll trade. So I put a little Apple on, for November 20th, and then I'm going to trade all week long. But that was kind of like a thought, okay, if I have to have something on, I could have that on. And I did the same thing with Amazon, because both of these technically don't look good. They're both below the moving averages. They broke their short-term trends. They look like they could test support. So I'm not sitting in the stock. And can I lose money on my options? Yes, but who cares? I know what I'm risking. You risk 3 to 5 grand. You know what you're risking by buying I think I bought the 115s for 2.25. So you're risking, yeah, they could all be a zero, but you know what you're risking versus if you're buying it here and it goes down 10 points, then its risk is unlimited versus premium paid. And when you have binary events, just like going into earnings, you go with options. You go with calls, you go with call spreads. If you think we're going down, you go with puts. You can go with put spreads. You don't sell options into binary events. You could be trying to pick up a dollar bill on the floor and get run over by a steamroller. I sold a lot of options in February and March, at extreme situations, and it worked very well. And a lot of people are like, Red Dog, it's very dangerous selling options. I understand it is. I did it pretty perfectly. Whenever I was wishing for a gap down when the oscillator was minus 70, minus 80, I'm like, let me sell spider options, puts $5 below. I think it's going to hold there, and I don't mind owning the spies there. So I made a lot of money selling some puts and selling calls in the indices and with some stocks. Like if all of a sudden, Apple, I don't know, it looks like it's holding 103 and turns up, and you're like, oh, I would love to own Apple at 96. You could sell the 95 puts or something, but I'm not doing it this week. No. A lot could happen and anything could happen. So we'll take it day by day. But will I be positioned in a few things just in case we have a huge gap up or a huge gap down? Yeah. How am I positioned for a huge gap down? Well, I got my VIX call. I have my VIX call spreads. I also am short some spies. Depending on the action Monday, Tuesday, maybe I'll put on some spy put spreads. I don't know. Or maybe I'll just have more cash. I have 4 different accounts with a lot of money to trade, and if I'm only sitting in 4 or 5 positions, that means that's my way of being risk averse, because I also hate to lose money short. So the last thing I want to do is be caught in a big short squeeze because the market likes what it sees on Wednesday morning, whatever that is. So this are your levels in Apple. And it was a great trend here. I made a lot of money into this, a lot of money. On this day, I remember it was the longest I've been long Apple in so long. The longest I've been long in Apple in so long. That's 3 longs in 1 cent. Why was that? Because look at it. It was my perfect trade, my perfect parameters. Above the 8 and 21 day, closed above a prior high, closed strong. I believe it was a Friday. And the event was Tuesday, and then boom. Okay, that was the perfect day trade. So you want to think about day trading or day and a half trading? You have a wedge formation above the moving averages, closed stronger than the market, and you got paid. Here is on the opposite. Basically opened above a prior high after a wide range bar to push everyone back. Could have got you out of the stock, could have got you thinking short, and then this, when it broke this 2-day range, that could have been boom, your calculated technical short. But anyway, that's Apple. Amazon, technically doesn't look good at all. But again, if I were to guess something that could act well, if we have a president and we have a stimulus package, it would be Amazon heading into late November. So what I do with Amazon? Did I buy any? Amazon I didn't add, which is good. I had 2 call spreads for earnings. One of them was a 0, and the other one I have 1130 3600s, which are not going to happen. I could just, But I also had a call spread. For earnings, I had a 3,600 by 3,750 call spread for November 13th, which is in 2 weeks. So what did I do on Friday? I bought back the calls that I sold. I sold them, I think I sold them for like $18. I bought them back for 4, so that was nice. But on the buy side, I bought them for 35 and they're down to 5. So anyway, I kept some of those on, but that's not on for the election. I'm gonna have to think about Monday, Tuesday. What do I want to do with Amazon, if anything? But as of right now, it's below the moving averages. It broke support. No reason to be long Amazon going into Monday as a technical trader. No reason at all. If anything, some guys might have went out short because like, okay, I don't have to deal with the election risk of gaps until Wednesday. So the short-term momentum turned lower as it broke this channel to the downside and it's below my moving averages. Here was different. Here you had a nice wedge above the moving averages. You could have been long, technically great, boom. Okay, again, above the 821 day, glass is half full, below, half empty. So anyway, I didn't do much with Amazon there. And there's really like not a whole lot to be in right now, without anticipating or without thinking, you want to miss something next week with the election because everything is kind of broken. Facebook, loose and wide below the moving averages. Thank goodness I got out of my calls for that on Thursday, which I did say like 2 o'clock. I'm done with the calls. It's up $10 or whatever it was. But now this is now short-term support 259. So you'll see what happens there. Twitter, wow, what a crazy move that happened. Closed out on the highs. That too, I was in the options from down here. I went out with 25%. I held 25%. On this, I'm like it's too telegraphed. I got to hold 25% just in case. So I made good money on 75% and the rest turned into a 0. But if you were like, holy cow, this is a great example of why you don't take a stock into earnings. Everyone's like, oh my God, did you see Snap? Did you see pins? Holy cow, Twitter's going to be fantastic. I'm going long. I don't care. And then that happens. You just got annihilated. If you said, hey, you know what? I think it can go up. I'm going to buy the 52 and a halves or the 55 calls. I'm going to buy 20 or 30, risk 3 to 4 grand. You lost 3 to 4 grand. But if you had 2,000 shares instead of 20 calls and it goes down $10, you just lost 20 grand versus 4 grand. And so I'm just saying that's why as an active trader who trades for a living with P&L, you do not take stock long or short into earnings. Even if you said, hey, you're like, but Redler, look at Snap. Look how Snap had the big gap up. I'm like, well, Snap's different than Twitter. Anyway, as we have Snap on, we made a lot of money. Remember Snap? I was in a lot of it here. I put on all the options there. Downtrend, broke above. Then I had options on for earnings here. This one we made money with. So this will be interesting also. So this is something that is now, anointed the special name because of earnings. So into next week's volatility, if we have it, we'll see. Does this come down to retest this? Right now I'm in no Snap. Maybe you could buy back at 34.50 to protect that gap. Okay, so that's something to watch. Or maybe it doesn't even get there. We'll use 38.79. Pins, we made a lot of money on that options play. Got out of it, and now this too. 68, 63 wasn't strong enough to hold that gap. We'll see if it comes in towards the 8 day, 53.87. Maybe that's something to look at for clues for next week. I am still in Baidu. Baidu actually was strong on Friday. It didn't get stopped out. My stop was 128, so I still have that on. The China plays have been actually pretty strong. So China itself. So this right here, I'm still in it. I'm in the 140 for earnings. Why the 140? Because this is the prior pivot. By the way, we made a lot of money in here. If you remember, we were in the stock and in the options, and we got to triple. Sold some, and I've been just sitting since. So we'll see what happens. Does this continue to hold? This could be your stop. Nice bull flag on top of this. It's above the moving averages. That looks different than Facebook, Twitter, Amazon, and Apple even. So that's why I'm in some of that. But the weaker the market gets, the more they get to everything. So you have to be on your toes. But I didn't get stopped out of that like I got stopped out of a bunch of other things. NEO, also fantastic. NEO, look how much money this has made us. I've been in this all year pretty much. Unfortunately, I got a little scared and I got out of it on Friday just because. Did I get out of it Friday? Yep. I bought it back here. I held through it. I bought more through 29.40, sold some, and then for some reason when I saw Tesla break 406, I'm like, you know what? Let me get out of NEO. I could probably buy it back here. And who knows, maybe I could still buy it back. This has been special above the 8 day this entire time, except for right there. What a move. Tesla, by the way, a lot of guys in the market trading for made a lot of money. Sure, I think I even posted the chart on the my public Twitter. I'm like, guys, Tesla was sold into earnings, okay, at 445. Got lethargic. I'm like, this breaks 406, could probably be a good short. And guys were shorting at Joe, were crossing me, made a lot of money. And sometimes I'm just your chief strategic officer who gives you plays to do. So Tesla broke this 406 area, got below the moving averages. So I'm out of Tesla for a while until it starts to get a new active sequence better. Could I have shorted this on Friday with everybody? Yeah. Guys made really good money shorting this. Okay. Why would they short it? Well, this was sold on earnings. Didn't do much here. Okay. And when it broke this ascending trend line, why wouldn't active players get out? Yes, one day could it start acting better again when the market starts acting better, et cetera, et cetera? Yeah, but for now we'll see. Does 379 hold on Monday, or does it work its way down towards 351? At this point, I have nothing to do with Tesla because although I'm probably going to get the Cybertruck, and although it's my number one P&L, position for the year, meaning I think if I go through what sometimes it's good to do is go through your prop reports to see where you make your money. So this way you're honest with yourself. Some people are like, I trade Tesla great. Then they look at their prop reports like, wow, it's not even in my top 10 P&Ls. I think I traded great, but I don't. Or I trade Apple fantastic, and you're even on Apple because you trade too many tickets. So it's sometimes good to go into your reports and see, where you've made your money. And for this year, Tesla's my number one. I think NIO's my number 4. Okay, and Apple's in there. And Amazon was number 2. I think it's got to be down to number 6 or 7 because, although I made a lot of money in Amazon here, I remember the breakout above this spot here, I held it here too long into that spot. I tried to be too cute. I'm like, I'm going to stay with it. And into that, I remember that was in September. That's where I got probably hurt the most is that, and here I just say I was in tier 1, tier 2, stayed with it, tier 2, back to tier 1. I held tier 1 the entire time, and then I broke some rules there and lost too much there. And then in here I had a call spread just in case it split. I don't know why Jeff doesn't split his stock, whatever. That's another conversation, but I had a call spread. I lost money into that too. But I was in it because I had FOMO saying, hey, what if he does split his stock 5-for-1 and has a solid report? Chances are it's going to take out 3,500 to be at 3,700. And I didn't want to miss that. So did I buy the stock and have it down 140 points? I'm like, no. I'll put a call spread on. I'll risk 10 grand. And if I lose 10 grand, I lose 10 grand. If it's right, I'll make 80. So that's what I do for options for earnings or something like that. Anyway, we'll see what happens here. Does it open lower on Monday and reclaim 2019, or does it open up and then break it, or does it open really down depending on how we react to Europe? But we'll see how Europe reacts to the lockdown by Boris. If all of a sudden the DAX is up, Monday with Europe, chances are they'll say, oh, we knew that they were going to lock it down. That's why it's been so weak. So we'll see where the futures are then anyway. So, so then some guys are like, Red Dog, why do you have that little spec bio, MBIO? I'm like, you know what? I write a report every year. Okay, every year I come out with a report I've been doing for 15 years, and typically out of the 20 names that I put all these different projections on, a lot of them all get fulfilled. Usually I'm like 18 out of 20 right. Some guys are like, hey, Red Dog, you probably should just take your entire account, put it into your 20 names, and go on vacation. I'm like, that wouldn't be fun. How do I do that? My kids got to be in school. I got to hang out with you guys. I'm like, I can't just do that. But a lot of times, not this year, but past few years, I would come up with 20 ideas and all 20 of them would work, and they all happen within the first quarter, the second quarter, and out of the 20 ideas, I may have played 6 of them. Someone's like, oh, I love that idea, that idea. Well, I'm like, oh, great. I'm like, that's why I do it, for you to do it. I don't have to do it for you to do it. But anyway, MBIO was my spec bio that unfortunately when you have 20 positions on, you have that mixed in there and no one really sees it, but when you have it only there, and this is not a technical play, okay? This is a play that, I've done extensive research on, and it's not for everyone. It's very, 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 very speculative, but I think that this range that's been put in for a year and a half at some point is going to go resolve to the upside. They're going to have 4 or 5 different trials going next year. There's a good chance to get into ASH. If they get into ASH, that's Thursday, and they could do a release on Friday. If that's the case, I think it goes a lot higher. If they don't get into ASH, you know what? I'm probably in trouble because it'll break this, and I have too many on. If they get into ASH, I think that, we can make a lot of money. Last time they came out with really good, Not even, for the bubble boy leukemia lymphoma, they had this huge gap up, but they needed to raise money. Where was the last time they got into ASH too? I think the last time they got into ASH was here, and it went from, 2 to 5, but it just wasn't ready for that. So anyway, it's not for everyone, but you guys see it on my disclosure. So every now and then I have to talk about it. It should just be my IRA as an investment. There's an investment that nobody sees, but I don't have an IRA that has individual stocks because I have 3 or 4 personal accounts, and I can't have stocks in my retirement accounts because just say I'm long Apple in my IRA and I'm shorting it in my active account where I'm registered, all of a sudden, there's a wash sale, this and that. So I just long term, all I do is funds, indice funds, usually S&P funds for my 401k, my wife's 403b, for my son's 529. So every now and then I have to have a stock in there that I don't just trade by the technical rules that I do for most names out there. Palantir, another guy was like, why are you still in that one? Well, this didn't really give me a reason to get out of it. This was a great trade for us. Has nothing to do with the election, nothing to do with anything. This was just something that I bought in this area. Remember, I'm in more PLTR than I've been in, ever. And then we had that move up to 11 or so. This was like a 10% move, made really good money, got smaller, and I'm still smaller. And as long as it holds this, I'm going to stay with it because it gave me no reason to be out of it. Then at some point, perhaps it makes another move. So that's why, that's on there. And GE is just a leftover play. So I have to just, since I have it here, it's acting just fine. So anyway, my stop on GE is here. It's not a barn burner, but I did make really good money in GE buying it in here. And then I sold most of the strength. And we'll see, it's not even worth talking about, but you guys saw it in the disclosure and like, why? Oh, and lastly, not even lastly, but this is actually more of like the thesis. Like if you want to have a VIX call spread, if you want to have gold call spreads, if you want to have a few leadership names with options on just in case. Well, just in case, we do get a vaccine. Hopefully we get a vaccine. You saw it perk up on Friday. I bought options, not the stock in Norwegian Cruise Lines. Okay, so it's there too. But this is a concept play. This is NCLH. Look, if you look where it came from, I'm not going on cruises anytime soon. I know a lot of people like to go on. I had a huge move lower from my friends that, do balance sheet work and this and that. They say that this fundamentally has one of the better balance sheets. So I'm like, just in case I miss it and I'm not watching it and it goes, I bought the calls for it just so I have to trade it, the 20s. Like, why did I buy the 20s? I'm like, because, you know what? It looks like if it gets a real move, it can get above 20. And it can get to 22 or 24, maybe even where it was here on that, last time it had a squeeze to 24. So if the market rallies and if we have a vaccine and if they come after these, I have some options on. If they don't and people decide not to take cruises and this and that and it doesn't work, my risk is premium paid. So that is kind of like a concept. Same way, Blue Wave, I have MSOS and Tilray. No president, I have a VIX call spread and I'm still short some SPYs. A president and and a stimulus package. I have some Apple calls on and Amazon calls on, and I'm sure I'll get a lot of other things as a new active sequence starts. But as of right now, it's Sunday at 12:25, November 1st, before Wednesday, with the technicals of the way they are. It pays not to have a lot of risk on if you're a short-term active trader that trades for P&L for a living. And longer term, if you are sitting on cash, okay, this is a spot to maybe put 25% in, which I told you I did for my wife. I've mapped out 2 or 3 other areas that might get seen over the course of the next month or two, just in case to buy more. We also went over short term, okay, what could hold or not, okay, this week. This is important. This is a spot. That's a bigger spot. And then in order for the market to get better, it's going to have to take out this descending trend line, probably fill this gap and gap over the moving averages and hold it, kind of like what happened here. If you remember right here, the market looked like it was going to roll over. It looked like it was done, okay? But what happened? You had a red dog reversal at this area, okay, which held support and then acted better, gapped above it, held it, and that started a new active sequence. So we'll see what happens here. At this point, a lot of bears are pointing to a double top with the lower high. Below the moving averages. So right now it's the active bears ball to lose. Here, it was the active bulls ball to lose, and they kind of lost it right here. There was a little bit of a fumble right there, and then this is when the quarterback got sacked on the active bull side, and now they've been in control. So now we'll see what happens. The active bears have control. Do they get sacked and do we start a new active sequence, or do they continue to pressure all the way down to the lower levels? So with that said, I think we're going on an hour. If you've been with me for an hour, cheers to you. We're going to have a very, very volatile scenario. Could be to the upside and to the downside. So when that's the case, you want to have less risk on because, there's not a lot of continuity. If we get through this week or two and everything's somewhat normal with the president and then, and perhaps a stimulus and the bulls take control, we'll be putting positions back on and we'll figure it out. If not, we'll day trade. We'll use red dog reversals to buy in the hole. Calculated. We're not going to look to catch a falling knife. If we, gap up into resistance and do the H-cell setup, we'll look to get short. There'll be lots of ways to tactically make money day trading. And if you are, again, long-term and everyone's trying to scare you out of your long-term plans, and if you can put money in every month, just stay the course, especially if you're 25, 35, 45, and even 55, stay the course. And you just have to figure out what you can handle. That's the most important, is figure out what you can handle and just know your time frame and know your risk and feed your brain and be prepared so you can execute fast, because this is probably going to be a very chaotic week. So I will be doing the 6:30 club, for 15 minutes a day to try and help all of you that aren't members of Redler All Access. By the way, a lot of guys like, what's Redler All Access? Well, Redler All Access is right here. Okay, if you want to look at it. That is my service that I write a note every single day that starts at 4:45 in the morning, goes to my editor at 8 o'clock, and by 8:30 I'm done with my morning call 20-minute video. It goes out to all my subscribers. It has the indices, it has my go-to list, it has what I'm doing, it has my disclosures. I have it in written form, like people like to read. Some people like to see a visual, so I do video with it. And then throughout the day I have a private Twitter feed, not Red Dog T3, it's Redler All Access, where I post 15 to 20 charts with all actionable setups on it, whether it's long or short. And then I try and update what I'm doing throughout the course of the day so they know what I'm kind of doing. But really, if people trade real time for a living, they're on the virtual trading floor, which shows when I'm putting positions on, taking them off, adding to them, subtracting them. So this way, if they're doing it also, it gives them some confidence to execute. Or if you just want to tune in from time to time, like you do at the 6:30 club, be my guest. Hopefully I provide enough value to give you the theme of what I'm looking at for the day to make you some money. And then at some point, some guys are like, yeah, when I make enough, maybe I could afford some of the services. That's cool too. Whatever it is, I'm doing it. I'm here. Take what you want. Remember, life's not about your P&L. And in order to be able to do this long term with the proper process, you need to have a routine that you love. And if you love your routine, you'll do it every day. And if you do it every day, you could be prepared for whatever the market throws your way. And the only way you're going to be able to do that, again, is with a process, a routine, confidence, and thinking straight. It's how you think. I always say, a negative mind will never get you a positive life. And that's true in anything. So keep that brain strong. Keep your stance firm, and you can handle anything. And hopefully I'll be with you here to help. Thanks for tuning in. I'll see you at 6:30 tomorrow morning. Bye-bye, guys.